and that looks to me to be about 23 points off the high of the day there in D's. All right, let's bring in Mr. Oliver Slope. Speaking of Oliver, he's with Blue Line Futures in Chicago. All right, brother. I don't know. We were looking at 440 and 480. At least that's what I was looking at. What do you think?
Yeah, I think a lot of people are looking at levels pretty similar to that. Going into the long weekend, it was like, wow, we're finally going to do it. Going to get this springtime rally that everyone's kind of been hoping for, and we open up this week and it's selling. We're seeing some moisture work through the Midwest and some more precipitation in the forecast, which I think is good, but I think that also might be pressuring prices a little bit, as I know there's been some concern over some dry areas, particularly in Iowa. On top of that, looking at the outside markets, we got the U.S. dollar continuing to rally higher this morning, which is probably also a little bit of a headwind here for some of these commodity markets as well. All in all, though, this is the time of year where I really get excited, where the markets really start moving around a little bit more, hopefully in a different direction than just down. Hopefully we get a little bit more back and forth, which we typically do on the back of uncertainty around U.S. production. And I think Thursday's USDA report with regards to corn acres does kind of shake up the conversation a little bit. So I expect the volatility to pick up from here, but I think it's going to be important for producers to really seize on these opportunities, on these rallies over the last couple of years. The market's been very forgiving, offering multiple chances to get some sales done. This year, I'm not so sure that they're going to get that forgiving market again.
I mean, what do you tell your producers? I mean, I will probably kill the crop once this year, but I mean, I guess the question is, where do we rally from, right? I mean, do you get a 50-cent rally from $4 or a 50-cent rally from $4.50? You know what I mean?
Yeah, I think we can maybe take a stab into the $4.90s and $5 level without any serious concerns. If we do get a serious weather concern, obviously, I think that certainly shifts things. But you never really want to hang your hat on a black swan weather event. I think we get these rallies, we get a little bit of short covering. I think producers would be wise to at least establish a floor of the options market. It's a great way to do it while keeping the upside open.
Everybody's going to sell the short cover rally in their marketing plan, so that's why I think I'm worried we might not get that. That's all. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope, Blue Line Futures. We'll be right back after this. That's lean hogs, so that's some pretty good going. All right, let's bring back in Mr. Oliver Slope, Blue Line Futures in Chicago. It's coming back again here, so maybe the water's warm. It's okay to get in.
Yeah, a little bit like a yo-yo trade here in the cattle markets to start the new month and new quarter, which I think is probably playing a little bit of a role in the volatility. Obviously, early last week, we saw a big breakdown and some long liquidation on the back of technicals really giving way. I do think that we can start to recover a little bit here in cattle, but I'm not so sure that we're going to see a retest of the highs. Looking at the June live cattle, if we can get back to 182, 182.5, which is where we broke down from last week, I think that's going to be a little bit of an inflection point in the tug of war between the bulls and the bears. The cash markets have, softened up a little bit. Seasonally, we start to soften up a little bit here. So I'm not saying that the market's going to roll out of bed, but I wouldn't be surprised to see the market maybe attempt to recover some ground and fail, and then maybe consolidate here with obviously a lot of attention on the outside markets. We're seeing rates make a move today. We're seeing crude oil within about $1 of the contract high for that May contract. So a lot of moving pieces in these markets. It'll be an interesting quarter for sure.
Yeah, I think you're exactly right. You just hit on it right there to me. I mean, we've had a lot of obviously data when it comes to the product-specific data. But maybe what really starts to shape things going forward is maybe we kind of get out of this damned if you do, damned if you don't rate hike cycle, and maybe we get some, a decent picture about where we're going to be going, because, again, still murky. What are we going to do with those outside markets? Are we going to cut? Are we going to hold? Nobody's really quite sure. But as time goes on, we'll obviously get a better picture. But I think that also will help shape some of these other things that have also been looking for some leadership from the outside markets. You got about 10 seconds. What do you think?
Yeah, absolutely. I think the outside markets are going to be a focal point for the commodity markets. We've been in basically a straight uptrend from the stock market. I think we've gone 6 months without a 2% pullback. So I think it's only a matter of time before we see that volatility pick back up again, and that could spill into commodities.
Just remember, stocks are not allowed to go down. Oliver, that's just the way it is. All right. Thanks very much, Oliver, for taking the time on a Monday. Oliver Slope, Blue Line Futures in Chicago. We'll bring it back here to Nashville, and I'll hand it back over.